Hello everyone, this is Billy Flowers and welcome to my channel where I talk about velocity banking and how we can use this strategy to massively pay off debt. And before we get started, of course, don't forget to hit that like and subscribe button. And in today's video, I just wanted to go over an article that I found that I thought will be something to share with all of you since tax season is officially over now, and I know some of you either got a tax return back or you had to pay. So this is specifically for people who might have found themselves paying taxes and maybe you underpaid on your taxes and then you had to owe some money to IRS. This is an article explaining how you can calculate your withholdings on your checks so you don't have to pay anything or pay at least a smaller amount when tax seasons come. So of course this is not tax advice. So if you do something like what's in this article and then something ends up happening, don't come at me, saying that, oh, Billy said that I should do this and then, it don't work out with you. So as always, do your own research. You can look at this article, read it, and see if it works for you. And also, of course, go to an official tax person, or if you have somebody that does your taxes, and get some professional advice before you do anything. But with that said, let's go over this article. Now, like it says in the title, here's a quick and dirty way to withhold enough taxes from your paycheck. So, if your federal tax refund or tax bill is more than expected, you may need to update your paycheck withholding. There's a quick calculation to see if you're on track, or you can use a free tool from the IRS known as the Tax Withholding Estimator. Now let's go down here. So typically there's a refund when you overpay taxes throughout the year and the tax bill when you don't pay enough. It's up to the employee to tell employees how much federal tax to withhold from each paycheck via Form W-4. And like it says here, the form seems like a calculus problem, but there is a quick and dirty way to figure it out. So after filing your 2024 return, you can see your total tax on line 24 on the second page of your filing Form 1040. If your earnings and tax situation are the same for 2025, your tax liability should be similar. So if you know that your pay is going to be similar next year, then you can use this suggestion for your withholdings. So next, you need to know how much you are withholding from each paycheck and how many pay periods remain for 2025 to see if you're on track. For example, let's say that your total tax is $10,000 for 2024. If there are 23 pay periods left in 2025, you would need to withhold roughly $435 from each paycheck. Ooh, that seemed like a lot right there. $435 is like, oh, hopefully you don't have that much taxes because that seems kind of that's like a car payment right there. All from each paycheck. What if you get paid bi-weekly? That's over $800 a month. That's crazy right there. But to withhold more, you need to resubmit the W-4 with an extra withholding added to the other adjustments section of step 4. That's a simple back of the napkin method. However, you'll need to readjust your W-2 at the beginning of the next year. It should also be updated as your tax situation changes, like you get a bonus, you have a second job, marriage, divorce, having a child, etc. Now, the IRS also has a tax withholding estimator. If your tax situation has changed or you want a more detailed update, you can use the free IRS tool known as the Tax Withholding Estimator. It's intuitive and it actually does a really good job. You'll also need pay stubs from all jobs, including your spouse, and the most recent tax returns. But it wouldn't be a good fit if your tax situation is complex. So if you have, business, a bunch of properties, real estate properties and all that, then you just need to go to your actual, in that case, you probably have a tax person. It's always just a good idea just to ask anyway, just to make sure either you're getting the highest return possible, or you're paying the least amount of money possible, or at least getting close to that break even. So with the rapid changes in income, investment earnings, or retirement plan distributions, you may need quarterly estimated tax payments to avoid IRS penalties. And that's the end of this article. I will leave the link in the description just in case that you want to take a look at this article yourself. And of course, like I said, don't take my word for it. You can read this article and make your own decision. Make sure you go and ask an actual tax advisor, an actual certified tax person to check and see if you're actually getting enough money withheld from your check if you're paying taxes at the end of each year. And this is just a little quick article that I wanted to drop for all of you, just in case you found yourself in this situation. And of course, I hope you found some value in this. And like always, I want to thank all of you for your support. And you have a wonderful rest of your day. And don't forget to like, subscribe, and comment below. And like I always say, get that cash flow.